Before we get into today's video, I just want to say this is not financial advice, but just my personal analysis. So now, let's get into today's video. What it do, guys, crew? Welcome back to the channel. If you haven't already, go ahead and subscribe and leave a like, as it helps the videos do well. Now, let's get into today's lesson, talking about XOM levels and my predictions on whether the stock market's going to be going up, down, and if I am bullish or bearish going into the future of the stock. Alright, ladies and gents, so talking about these XOM levels. So first, we've already been over where our key resistance is to see any higher push, and as we all should know by now, as it should be in your notes, is 119.91. With that resistance being there, that is holding us back from any further upside push. And as of now, with support from previous month high at 116.54, that is now our first line of support. Also, we are in my fair value gap resistance as it's been playing out. So far so good. As you can see here, this red box, this first red box, is that resistance zone. If you zoom into a lower time frame, you can see where it is. And how it's drawn out with these red candles here. Just like so. So, with that now being knowledge for yourself to keep in mind, we're trading in our resistance zone. So what that means for us is we must break through this resistance zone to now go test that big line of resistance that is holding us back from any further bullish push. So that level that we first need to break, as we all know, with XOM, it does trade in halves and wholes. Tattoo Money has been telling us this from day one, that it trades in halves and wholes. So if you don't have that in your mind, you need to have it there, because that's all we trade is XOM. So you need to know everything that you can about this. We're not just giving away free game for you to just have it come in one ear and out the other. We're trying to make you learn and fully understand what it is about this stock and how it moves, so you can earn the most. That's why Tattoo Money is always saying learning is earning. So, like I said, 118 is that first level we need to break in that resistance box. Then the next level is going to be 118.50. Like I said, halves and wholes. First level, 118. As we saw from last week, it couldn't break past 118 and hold above it. So now we know we have resistance at that whole number. So then once we break past that number for the bulls, now we must go to 118.50. And then so on and so forth. And then we push up to that big resistance to 119.91. And then once we get in there, now I've also charted out a gap down around 120 to 120.70. 120.20 to 120.70, we had a gap down. So we also must fill that gap first after we break past our resistance. So from 1991 to break into 120s, we must fill the gap between 120.20 to 120.70. So from our whole number 120 to above our half number 120.50, we must fill that gap. And then we can start to then push to 121 flat, to then our half, and then our next line of resistance would be 121.74. Now, I want to explain how I'm seeing these levels, and it's really simple, and a lot of people keep asking me how do I get my levels, and so I just kind of want to go over that for how I'm getting these resistance levels. So let's zoom out here a bit. Okay, up our time frame to the daily. So here we have a better view of where we can chart out our key levels for resistance and support, and that is the strategy I play: support and resistance, among other things like fair value gap, 9 EMA, 50 EMA, MACD. But that's besides the point. Right now we're just talking about key levels and how to find them. So it's pretty simple to find support and resistance levels by simply looking to the left and seeing where price went up to and how it reacted. Did it go to a price, stop, and go down, or did it go to a price, stop, and go up? So, meaning if a price went up, like if the stock market went up to the price and then stopped at that price and then went down, that would now tell us that is a good line of resistance, especially if it does it more than one time. Now, to find a support, we would need to see the stock go down to a certain price level and then go up and bounce off. So, as you can see here, at 108.26, we have support, because after that big downtrend on the handle, from the cup and handle, it stopped. And what did it do? It bounced up. So now we know that is a good line of support. Then our next level of support, we came down, and then we bounced off that 110.41. That is our second line of support. Then we came up off that support, went all the way up to 119.91 after we've already hit it once, or actually look over here to the left, once, came down, twice, and then 3 times. And like Chris Sane says, every time that there's a heavy resistance line, after the 3rd time, after there's 3 knocks, it usually shoots through. But there's a lot of other things that factor in to see whether or not the stock is going to keep going up or if it's just going to reverse down. So that is how we can kind of see where the key levels for support and resistance are. So I hope that kind of made that a little bit more clear. And then after we hit that 119.91, we came down, found our 3rd support at 113.10, because after we came down, our candle stopped out. What did we do? We bounced up. So that is now 1, 2, 3 levels of support for playing the downside, to look for bounces. And also we have created a 4th line of support so far. Now this is not a very strong support, but as of now it's working to the point to where its previous month high in June, this was the highest point price got in June, and we broke that. We broke that on, I believe it was Thursday. Yeah, Thursday we broke that. And then Friday, we had a little gap down. And we gapped down to that level of 116.54 and then bounced up to 118.05. Now we did not break that 118.05. That's why you see that wick. Now if we would have had a body above that, we would have properly broken 118, but we didn't. So far, 118 is still a good resistance point, like I had explained in the beginning. So, with that being said, now we can talk about my prediction for those levels on whether or not I'm going to be bullish or bearish. And by all means, this is not professional trading advice, so don't take it as that. This is just my personal opinion from what I see and what I just feel like could happen and what I'm more pointed towards. So we know about our resistance levels and our support levels now, so I hope you took notes about that. But on the daily time frame, as you can already see, and as you've been able to see all video that I haven't talked about yet, you've seen a bear flag being drawn out. And I just want to show everyone that real quick. That is a bear flag. This is a bear flag. This actually shows a better example because of how big of a pattern it is. And as you can see, they're pretty identical. And this is on the daily time frame. So with daily time frame, this just shows you a broader perspective, like I said, to keep in mind for the bigger picture on where stock is ultimately going to be going. With the cup and handle not fully being respected and pushing through the roof and getting stopped out at a resistance level that's already been hit twice before, we kind of disrespected that pattern and had that drawback, but it was still bullish on the drawback. But with that drawback, then it decided to form a new pattern. And with patterns, like I've explained in a previous video, I like to give you an edge on a prediction on where the stock is going to be going. Now all the times is the pattern going to be respected, like we've seen previously with the cup and handle. Like it should have just shot up, and it didn't. It had resistance, came down. Yes, it did break the handle for a whole week, but it didn't ultimately go and break the all-time highs like a cup and handle is supposed to do. So, in my opinion, I'm bearish. I would like to see this thing plummet all the way down to about 108 and below and ride it down. But we have to watch for this structure break and watch for our support. If we break our 113.10, we're bearish. We're going down. There's no more trying to push to the all-time high just yet. We would then have to start forming new patterns. But with that being said, on why I think we're bearish is not just with the chart pattern, but also if you look over at the S&P 500 on the daily, you can see the MACD is going down. On XOM, the MACD is going up, but ultimately this is a bigger index, and the XOM and S&P 500 run together, and this S&P just gives you a bigger perspective on where the whole index itself is going to be going. So with the MACD going down and my 9 EMA now being broken, soon to be the 50 EMA being broken below and holding, we're going to be seeing some downside. And that's okay, because we make money both ways, so it's not going to really affect us in any way. We're still going to be making money, but that is where I think we're headed, is to the downside. So I hope you took notes on everything today. Hope this was useful. If it was, make sure you comment down, like, and subscribe, and I will catch y'all in the next video. Peace.